there, it's Mike Wise, CMG Home Loans, with your weekly mortgage update. And it was a pretty volatile week as far as the stock market was concerned. That made the bond market pretty volatile. At the end of the day, interest rates did not move much from last week. They inched up just a little bit. Let's take a look. Let's go into some of the details that we have this week. So, Bureau of Labor Statistics came in. Basically, the jobs report added 151,000 jobs in February, which was a little bit below the expectations from Wall Street, but not much of an issue there. So ADP, you can see jobs are going down here. Let's see here. JOLTS report, same thing. I'm not going to go into detail. The CPI, month over month, up 0.2%. They were expecting 0.3%, so that was a little bit better than expected as far as the inflation numbers. Dropped year over year to 2.8% from 3%. So we're starting to see some of the inflation numbers get better. I'll go into that in just a minute. I'm going to go into some details that you'll want to take a look at, because shelter costs, again, are still an issue there with the inflation numbers. Wealth effect. I think this is a super interesting piece of the market. As your value of your assets go up, stock market, bond market, your asset, your housing, it gets better. Your valuable, your collectibles, all those things, it starts to get higher values, or the inflation of those things, then you feel better as a consumer. What happens? You spend money. And when you spend money, that helps the economy. Well, we're starting to see the tide turn on that a little bit. The value of the assets, your stocks came down. You're a little bit more nervous about what's going on in the market. Maybe there's your collectibles, your gold maybe is not going up as much as you would want it to. In fact, gold is at all-time highs right now. But at the end of the day, this is the wealth effect. As your assets start to go down, you start to pull back your purchases. You don't spend as much. The economy gets worse. It goes into a recession. So it's called the wealth effect. It's a very interesting thing here that we have to look at. Redfin, purchased by Rocket Mortgage. Very interesting thing there. I'm not going to go into detail on it. Next week, the Fed meets. And there's a 100% possibility that they're not going to do anything with the Fed funds rate. So don't look for any changes as far as your credit cards or your lines of credit. There is not going to be any drop in the Fed funds rate next week. There needs to be more information for the Fed to make a better decision. Again, I'll go into the inflation numbers in just a second. At the end of the day, mortgage rates, they ticked up just a little bit. They were at 6.7 last week. We're at 6.84% this week. So let me go into inflation. This is from MBS Highway. Give them the street cred for this. They put out this information. So we talked about the core. You can see the month over month and year over year effect, up 0.23% month over month, up 3.12% year over year. The shelter is a big piece of this. So we're going to take a look at the shelter here. It is up 0.28% month over month and 4.24% year over year. If you take a look at the monthly effect and the yearly effect, it's over half of your total core inflation. So these are big numbers. It has a big impact. At the end of the day, I think that we know that there's a lag effect on these numbers. Right now, the rents, they're at 0.28%. We were at 0.4%, right? And so that number has gone down significantly. We're trending down in that right direction. A couple more things I want to point out. One is the airlines. Airline fares down 4% month over month, 0.7% year over year. This is a big number. A lot of eyes on this. Looking at this, this is an initial reading of, like, are we going into a recession or not? So this is something that they're going to be looking at. The core CPI without the shelter, so you get rid of the shelter, you're at 1.95%, below the 2% target for the Fed. So as long as this shelter starts to go down and we see that go down, the inflation will come down. We will start to see the core get to where it needs to. So What I want to take a look at here is the Trueflation. Trueflation is a website. You can go to it. Just Google Trueflation. This is, if you're a little bit nerdy, you can get into some of this stuff here. Year over year, 1.5% is the Trueflation. They measure a lot of different data points, more so than what the Fed measures in the CPI and the PPI numbers that we got this week. So the Bureau of Labor Statistics, they're reporting 2.8% right now. Trueflation is at 1.5%. This takes out the lag of everything. So let's take a look at this. When we look at the categories, this is diving deeper into the inflation numbers. Food and beverage, 1.94% from a year ago. The biggest thing here is eggs. Eggs had a huge impact on the numbers this week, and so look at that. Watch, the eggs are starting to come down, so the food and beverage will come down along with it. Housing. This is very interesting. When you take a look at these things, you can see the trend is moving down here. It's slower than anticipated, but if you take out the everything, this is other housing, this is Airbnb, VRBO, all the short-term rentals, those hotels, that type of stuff, you can see that those things are dropping very, very quickly here. So they're going down at a fast pace. Transportation. One thing I wanted to show you in here, again, this is having it's kind of going sideways here. Well, what is going down significantly? So when you take out, and you just add the gas here, right? The gas is down significantly. And so even though we know that it drops in the summertime, from a year ago to today, you're down 2.1% in the transportation category alone. But a huge piece of that is gas prices. They are starting to fall, so watch that number as you go forward there. Utilities, kind of volatile there. I'm not going to go into any of the other things, but you can go into each one of these items here, and it shows you where the inflation is on all of that stuff. So at the end of the day, mortgage rates, 6.78% this morning, up from 6.7% last month. Jumbos, I'm quoting about 6.75 on the jumbos as well. FHA and VA, we're talking about the 6.2% on a 30-year fixed rate loan there. So lots of things going on. I want to make sure that you know about our all-in-one loan. Let me give you an example of all cash buyers. So if you have an all cash buyer, why would you only buy one property? Buy two properties with the all-in-one loan. That way you have two income streams coming through. You have two properties that are appreciating at 4 to 5% per year. You have more 2%, two properties appreciating over time. The net worth and the effect of the net worth over time is a huge piece. So this is Mike Wise. I will be in the around all weekend, so text me, call me, whatever you need. I will be available. I hope you have a great weekend, and we will talk to you next week.